holding you back, holding you back from touching the sky? What's holding you back? You gotta fly like an eagle and go high. What's holding you back, holding you back from touching the sky? Oh, holding you back, you finally gotta reach for the sky. I was born to succeed, not to be a spoke in the wheel. Told myself there's more to this than just waking up when I feel. So I made a commitment to turn my earnings up. Couldn't see myself as an employee that still couldn't. Looked in the mirror, saw a spark in my eye. Knew I had to hustle and stop living a lie. I packed my dreams in a suitcase, took the first train out, headed for the horizon with success is no doubt. What's holding you back, holding you back from touching the sky? What's holding you back? You gotta fly like an eagle and go high. What's holding you back, holding you back from touching the sky? Oh, holding you back, you finally gotta reach for the sky.
Greetings and welcome to another edition of What's Holding You Back. My name is Rob McCray from the Business Building Network, and I am so delighted to be with you one more time as we come together as we're going to have another amazing discussion on a very interesting topic. And our topic for today shall be, when will housing become affordable, when will housing become affordable again? So yes, it is a very interesting topic and one that we have not touched upon previously, but we're going to dive deep into it today. And I'm quite sure you're going to get plenty of golden nuggets from this discussion today. So please, as you are jumping on board, please leave us a comment. Let us know where you're tuning in from. We would love to get your feedback and also get your opinions on what is going on in your areas when it comes to the housing market. So we're going to get into that in just a little bit. So I just want to say thank you to each and every one of you for joining us this afternoon as we have my Sister Yvette Bolden from Bold Nutrition's Consulting, always staunch supporter of the program. So thank you so much, my sis, for joining us. And we look forward to each and every one that she'll be jumping on momentarily. So let us get into our discussion for today. As you know, we always like to start off here on What's Holding You Back by sharing a word of inspiration, a word that is going to be in line with our topic of discussion. And for today, our word of inspiration states, patience is not just the ability to wait, but the ability to keep a positive attitude while waiting. Be gracious and also be patient, be understanding, and be grateful. Because everything does not happen at the time in which we always want it to happen. So we must show patience in those things in which we are looking or anticipating, and we must be gracious when we do eventually get those things in which we so desire. But we always want to lead from a positive mindset and not be over anxious and not become irritable when we are waiting for that delivery of those such things in which we are looking for. So yes, that is our word of inspiration for today pertaining to this particular topic, which is once again, when will housing become more affordable? So yes, we're going to get into our topic of discussion for today. But before we do, I just want to share a couple of things with you. Now, there's going to be a lot of information that we have to cover pertaining to this particular topic. So we're not going to cover everything today. We're going to break it up into two segments. So today we're going to focus on the home buying and home selling aspect of it. And then next week, we'll get more into the rental aspect for those of you looking to find affordable rental spaces. So just want to share that with you before we get into our discussion for today, just to give you a little heads up and get you anticipating in what's to come next week as we're going to dive deeper into looking into apartment rentals for those of you that are not necessarily into the home buying aspect of this discussion here. All right, so with that being said, let me just pull up our slides and we shall get into our discussion for today. So, when it comes to finding affordable housing, that is something that is at this time, it is something that is not really uh, what we're seeing in the housing market. The housing market is very inflated. The price for properties is really, some would say, out of reach and out of range. And it is really not a means in which is going to be sustainable. So the prices are going to have to come down in order for everyone to be able to participate in the housing market if they so desire to do so. So the first part of our discussion, we're just going to be talking about some of the stats uh, and what has led to us being in this current situation in the housing market. Why are the prices so inflated? And then we're going to talk about some of the things that have to transpire in order for these prices to come down. And then we're going to conclude with um, a particular time frame as to when we can expect these changes to take place. So that's going to be the basics of our conversation for today. So let us get into it. All right, so as you can see here on this chart on your screen, this is from the US Census Bureau, and these stats on the left of the graph there are from the years of 2022 and also 2023. I know it's a little small, so you may not be able to read it, so I'm going to read it for you. Excuse me. All right, so at the top left, um, so the bar graph in the dark green is from the year of 2023, and the bar graph in the lighter green is from 2022. So this is the median household income within the United States nationwide. All right. So for the first one, it says for all races, the median household income is $80,000. And for that was for 2023. And for 2022, the median household income was 77,000. All right, so only a $3,000 difference between that year. All right, so for white Americans, 2023, the annual household income was 84,000, and in 2022, it was 80,000. For whites non-Hispanic, it was a little higher. 2023 was 89,000, and 2022 was 84,000. For blacks, look at this, a big drop. So blacks in 2023 only amassed 56,000 median household income. And in 2022, they only accumulated 55,000. And as we go down to the next graph, we see the Asian community. And theirs were 112,000 for 2023. And I can't, 113 for 2022. So wow, that's a big, big jump there. All right. And at the bottom, we have the Hispanic community, and their annual household income was 65,000 in 23, and it stayed the same in 22, 65,000 as well. Now, going into 2025, this is just the national numbers. The annual household income was $83,000 in 2025. But the greater average income for 2025 is 121,000. Now you may ask, why is there such a difference in those numbers? All right, let me just explain this to you real quick. So the median income that focuses on the average. It pretty much takes out the high numbers and it takes out the low numbers. It gives you just the basics from the average, right? So it's going to give you a better perception of what the actual average household income is, right? Whereas the greater average, it factors in the very high numbers, the very high income earners, and the very low income earners. So that's why you see the big discrepancy in the amount of income with these two measuring points. So from going forward in this discussion, we're going to focus on the median numbers, which is typically the average numbers on a whole. So we're just going to focus on that. All right. So just wanted to share that with you. All right. So as stated here, the household income was 121,000 for the greater average and 83,000 for the median income. Um, so now let us go into our next slide, and we're going to talk about some of the selling prices. Greetings, Antonio. That's my nephew. Blessings. Good to have you with us. So, yes, family, as you are jumping on board, please leave a comment. We would love to acknowledge you and welcome you to the program. And also, please share this out. We're going to be sharing a wealth of information that you can come back and view on all of your social media sites. And it is good to share this information so that your friends, families, and loved ones can see this information as well. All right. So we're talking about our second slide here, and we're going to talk about the national selling price of homes in the year of 2025. And we're going to go into the fourth quarter of the year, and we're going to focus on October. So the national selling price for homes in the United States was 440,000. But for new constructions, it was a little cheaper. Those numbers were only, not only, but those numbers were 392,000. So you can see there's about a $50,000 disparity between buying a new constructed home as opposed to one that was already built. So those are the housing sale numbers for 2025. And just a little side note here, the number of new homes for sale listed on the market for December of 2025 was only 284,000 homes were listed, which is low. That is the lowest numbers of housing being listed on the market since December of 2022. Why? Because housing is so expensive now that a lot of people have been priced out of the market. So that is why we're having this discussion today. All right. So, in talking about the astronomical housing prices, let's look at this slide here. And it talks about the top three states in the U.S. As their how what are their housing prices at this current time. So the top state in the US when it comes to housing prices is Hawaii. And the average home price in Hawaii is a whopping $973,000. Can you imagine? Second is California, the state of California, and their average home price is 809,000. And the third, which is not a state, but the District of Columbia, is 764,000. I never would have thought that the homes would be that expensive in the District of Columbia, but they are. And the fourth or the third state is the state of Massachusetts, which has an average home cost of 685,000. Just going to give you a couple more. The state of Washington is 626,000, and my state of New Jersey is 586,000. So as you can see, the housing prices are way out of proportion. So there has to be a decrease in the inflated housing prices so that each and every one of us will have the opportunity to get back into the housing market if we so desire. And as I stated earlier, next week we're going to go over the rental market, and we're going to, go deeper into that, and also talk about why the rental prices are so inflated, and it has a lot to do with what the current housing prices are, but we'll dive more into that next week. All right, so let's talk about what the monthly mortgage payments are like in this time and season in which we are going through. So, for that previous example, when we talked about the home prices in Hawaii and California, so let's do a quick example. So let's say um, there's a home you're interested in the 900,000 price range. Yeah, unbelievable. So in order to take out a mortgage for that property, your monthly payments would be somewhere around $6,000 per month. Can you imagine? And in order just for you to qualify for a property such as that, you would have to be making, I would say, $18,000 to $20,000 per month just to qualify for that property with that a price attached to it. So just give you some perspective on how, you know, these prices are so out of whack. So when it comes to your mortgage payments, and when you want to try to qualify for a loan or a mortgage, experts generally recommend that your total monthly mortgage payment, which includes your principal, your interest, and your taxes and insurance, should not exceed 25% to 28% of your gross monthly income. So you do not want to exceed that amount when you're looking to get a mortgage for a home. All right. So while 28% is the ideal range you want to be in, some lenders may approve borrowers for higher debt to income ratio, all the way up to 43%, depending on their credit score and other varying factors. But keeping it under 36% is generally safer for personal finance, and that's the number you want to try to keep it at, so you won't come into too much financial strain when it comes to maintaining your mortgage payments. All right. So as we as we already know, the market is very much overinflated. So, why is it that the prices on homes are so high? Well, there are quite a few factors that go into that, and we're going to talk about that a little bit. So, what are the causes of some of these inflated prices in which we're seeing? And one factor is the mortgage rates, right? So, from 2015 to 2021, the interest rates were very low, between 3 to 4%. And that was a great time to go out and borrow money because your interest rates were so low. And that gave many people the incentive to go out and buy properties or homes, right? So that was the first factor in creating the inflation of the home and housing prices because everybody was out there in the market looking for homes. And it was a seller's dream because now, with all of these buyers out there and such a low supply of homes, it became to be a bidding war when people were two or three people were desiring a specific property and they were bidding against one another. And this started to increase or inflate the prices of homes. So another factor is, yes, like what I was just saying, there was very low supply and high demand. So this was, again, a big factor in the increase in prices that we're seeing. When you have a very low supply, of course, the demand is going to be much greater. And like I said, it's creating that bidding war where potential home buyers are bidding against one another and just driving up the price. So another thing that happened, very, very important thing that happened in 2019 was COVID. And that had a great impact on the housing market. So if you remember back in 2020, that's when we really started to feel the effects from COVID. And it was during that time that the country was pretty much shut down. People were not allowed to really go out too much unless you were an essential worker working in the medical field or something like that. Otherwise, everyone else had to be positioned to work at home if at all possible. So this created a very stagnant environment, and it made people feel as if they were in a kind of a hole. They were pigeonholed in a place, and they really couldn't do too much. But what happened when the companies started to tell their employees that they're going to need to work from home because they couldn't go out to the job place or the workspace, this created an environment where the people that were working from home started to realize that if I don't have to commute anymore, then I don't have to be in a major metropolitan city. I can move out further out to the suburbs, buy a home or an apartment out there, and just work from home. Because why? I no longer have to commute. So this again was a great factor in creating another demand, a higher demand for more housing. So as people moved away from the big cities and into the suburbs, now there was a greater demand for housing in those areas. And this also had a great impact on the price of housing going up in not only the major cities, but the suburbs as well. So this was just another factor in increasing the housing market, right? And another thing which was unforeseen by many of us was that a lot of big time investors, the hedge fund owners, and private equity firms such as Blackstone, BlackRock, American Homes for Rent, and Tricon, they started to aggressively buy up a lot of single family homes and they started to rent them out. They would buy up these homes at the wholesale price and then rent them out. And this was just phasing many of us out of the housing market at at an unlimited basis because we were now really priced out because we couldn't compete with these big um, major investors because they can buy up the properties with cash, and we just couldn't compete with that. So it just monopolized the market and enabled them to buy up a lot of these single family homes. And again, this increased the prices once again and phased out the regular consumers, you and me, from being able to being a part of the American dream and buying our own homes. So all of these factors played a big part into why we saw such an increase in the price in the housing market. So let's look at what the housing prices were like from 10 years ago, a decade ago, 2015. So in 2015, the median sale price for a single family home nationwide was only 223,000 as compared to what it is now. So let's go back to our slides. And the average national sale price for a home now, as of October 2025, is $440,000. So as you can see, the price has almost doubled. So that just goes to show how inflated and oversaturated the market has become when it comes to the pricing of these homes. All right, so the housing prices have doubled in the last decade, primarily because of the high demand of housing, and there was already a shortage going on during those times, and it just became worse and worse with many more people moving out of the metropolitan areas and going into the suburbs, and this just helped to create a greater demand and increase of the housing prices. But things are starting to turn around. And they have to change because this is not going to be sustainable if the prices keep going in the way they are. So what has changed? Well, as of 2025, the fourth quarter of last year, we saw that the interest rates dropped 3 different times. So that's a start, right? Another thing that has happened is we're starting to see a lot more construction going on, construction of new homes. Why? Because they know there is a great demand for more housing. So there was a concerted effort to build up more properties in all of the varying states to try to diminish the high demand and eventually bring down the prices. So now another thing that we're starting to witness, unfortunately, we're seeing the unemployment rates start to increase. And as of late 2025 and early 2026, the US unemployment rate has risen to a 4-year high of 4.6. And as people lose their source of income, they will also start to lose their homes. Now, we don't wish bad for anyone. We don't want to see anyone lose their homes or their livelihood. But this is, just a part of the process that happens. Um, it is nothing new. This has been going on for years and years, and centuries. It's just how the market operates. We have our ups and downs, our ebbs and flows, and there's always going to be that correction. And normally, it's every 10 to 12 years that we see this correction. The last housing market class crash, was in 2008. So we're in 2026 now. So yes, unfortunately, we are long overdue. So what we're going to start to see happening, as you can see here, the unemployment rate is rising. Many people are starting to lose their job because the economy is so bad, because money is just not flowing. Um, Currency has to move back and forth, exchange hands, and it's not doing that because the housing market is at a standstill right now. The prices are so high that many people cannot afford to buy a home. So now, as you can see, properties that are for sale, you're going to see them standing and sitting on the market for longer periods of time. So let me ask you guys, for those of you, let us know what state you reside in. And if you have seen any for sale signs for homes within your neighborhood, not so much in the winter season. Let's go before the winter started. So go back to like September, October, and maybe even into November. Do you recall seeing some for sale signs in your neighborhood? And if so, how long did you see those signs stay up before they went under contract? So I can recall that uh, in the latter part of 2025, in that September, October, November timeframe, I was seeing a lot of for sale signs going up on different properties. And these signs were staying up for months at a time. And this was uncommon at this time, because if you would have went back to 2024 and saw those same properties for sale, within a week they would have been under contract. So it just goes to show you that the change is starting to take place. We may not be seeing it or realizing it as of yet, but just pay attention to your surroundings. Go back through your neighborhoods and look and see if you're seeing any for sale signs, and see how long those for sale signs are going to stay up for those specific properties. I know that we're in the winter season now, so it's going to be um, not so much relevant because, you know, a lot of people don't want to move during the winter season. So, of course, they're going to stay on the market for a little bit longer. But as we get into March and April and the rest of the year, remember to take a look and see when those properties come onto the market and how long they sit before they actually go under contract. And that's going to tell you a great deal of as to how the market is starting to shift and how it's starting to change. And if we're going to see a downturn where the prices are going to drop, or is it going to stay stagnant as it is? Because, you know, most times home buyers, no, excuse me, the home seller does not want to drop their price. So they're going to try and wait it out. But let me tell you, that can be a great mistake. This is this might be your last opportunity to get the actual asking price and what you're looking for your home. So if you wait, and you wait too long, you wait another 4, 5, or 6 months to put your home on the market, and then you're going to see that the buyers are still not out there, and they're going to be waiting for the prices to come down. And then you might run yourself into problems where you're not going to get your asking price, and your house is just going to be sitting on the market. So you have to be willing to negotiate and, take a little bit off the price, or do whatever negotiations you can to appease the potential buyer. Otherwise, you're going to see the properties just sit, and the value is going to continue to decrease. All right. So just wanted to make you aware of that. All right. So as we stated here, with the unemployment rising, what we're going to start to see as well is a lot more foreclosures, and they are already starting to take place. So the foreclosure activity increased in 2025, with filings being up 14% from 2024 and up 213% from 2021. Wow. So, yes, in 2021, the housing market was pretty much at its peak. It was a buyer's frenzy. Excuse me. Everyone was out there. One second. Whew, got choked up about that one. But no, in 2021, it was a buyer's market. Well, no, it was a seller's market, actually. But everyone was out there looking to purchase. And since there was such a low demand, low supply, excuse me, that, they were able to increase their prices, and they can pretty much, you know, put anything on their asking price that they wanted, and they would be able to get it, because it was such a high demand for housing that everyone was out there looking to purchase. And now, if you look back at those same individuals that purchased the house from, I would say, 2021 till current, a lot of them would tell you that they regret actually purchasing their home, because now they're starting to see the value of their home start to diminish, and now they're underwater. There is no equity in the home. So if they even try to sell a property now, they would have to throw in more money to actually close the deal and actually sell the home. So, like I was saying, what we're going to start to see, well, we're already seeing it, is we're going to see more foreclosures come onto the market. And these are the properties that the bank have ownership of. And the banks don't want that. So they're going to sell them back at a reduced price to the public. But, this is just a sign of how the market is starting to turn. So as I was saying, in 2025, foreclosure filings were up 14%, and it's only going to increase as more and more people become unemployed. We're going to see a lot more people start to lose their homes, unfortunately, and we're going to see the foreclosure rate increase, and then we're going to see the prices of homes within those areas start to decrease based upon the comps in the area. That's just how the housing market goes. So you're going to start to see this more and more. So as you start to see these things happening in your neighborhood, and if you really are interested in getting into the housing market as an investor or just a home buyer, then you have to really study the market and, make the best possible decision for yourself. So that's why, we wanted to share this information with you, so you can, continue on with your research and make a educated decision for yourself when it comes to getting into the housing market. All right. See, we got a couple of comments in there. I'm gonna get to them in just a second. I just want to finish out with the slide. Excuse me. Okay. All right. So let's talk about some of the areas which are already starting to see a great reduction in the value of the homes. So the top states which are already starting to see a housing price decline are Florida, Colorado, and Texas. They are starting to see great depreciation in the housing prices because the market is has been so stagnant in those areas, and they have a lot of construction going on. So now they have a greater supply that cannot meet the demand. So what do these new builders have to do? They have to drop their price in order to get some buyers to come in and buy their actual property. So what does that do to the properties in the surrounding area? It's going to decrease the perceived value of those homes as well. Why? Because that's how the comps or comparisons work. It goes by how a property with similar dimensions and bedrooms and facilities, how that compares to a property that just sold in your area. And as these other properties start to sell for a lower price, it's going to decrease the perceived value of the homes in the surrounding area. And this is just going to create a snowball effect. And you're going to see the prices drop and drop and drop until they finally come down to a point where people feel pretty comfortable with getting back into the market and start buying again. And of course, we're going to have to see some more interest rates decline. And the Fed has already started doing that as of late 2025. And I would think that they will continue to do so to continue to try to stimulate the economy because, like I was saying, money is just not moving. And that's very bad for the economy and everyone involved. And then one of the most finalizing factors that you may see is when the Fed decides that they need to start printing money and create some stimulus checks like we had when COVID, when we were coming out of COVID. So they had to do something because everybody was out of work. Uh, People had no money to pay their bills. So they had to print money and send out stimulus checks to try to revive the economy, to get people back to purchasing and exchanging money, exchanging currency, and revitalize the economy. So this is how, this thing works. And we just have to be aware of what's going on so we can make a very informed and educated decision for ourselves as we continue to go forward and look to get into or be a part of this housing market in going forward. All right. So let me just give out a couple of greetings. Sorry to keep you all waiting. Pastor Salmon, bless you. Thank you so much for joining us. And we also have, my one and only Pastor Fred. God bless you, sir. So good to see you. And we got my brother Smoky Bones, James Jones out of Georgia. Yes, sir. Yes. Okay. Yeah. Out in Georgia, he says investors are buying everything up. Oh, yeah. So something I forgot to share with you guys. All right. I'm glad you said that, brother. So yes, your president, Mr. Trump, just wrote a what is it? Executive order. Let me bring it up on the screen real quick. Give me 1 second. Okay, make sure you're seeing this. Oh, okay. All right, here we go. All right, so I know you probably can't read this, but I'm just going to read it for you. So, President Donald J. Trump stops Wall Street from competing with Main Street home buyers, and this was as of January 20th of 2026. So, just 2 days ago, yeah. So, President Trump wrote the executive order, Protect the American Dream, making sure that large institutional investors do not do not buy single family homes that could otherwise be purchased by families. So that is a good thing, most definitely. Now, will it actually go into effect, or is this just a publicity stunt? Only time will tell. But in the event that it does come to fruition, that will be a wonderful thing because, by these big investors coming in and buying up all the properties and increasing the price, that's not good for any of us. They want to monopolize the market and just rent out these single family homes as rentals so that they can eliminate us from being a part of the home buying process and just be stuck as renters. So hopefully that that bill will be passed and it will come into law, whereas investors, the large investors, will no longer be able to buy these single family homes. Okay. Homeowners are taking less, selling to investors. What is it? Taking less, selling to invest. Oh, okay. So you're saying the homeowners are selling their properties at a lower price to investors? Yeah, probably so because they're getting them for cash. They're probably doing cash deals with them. So yeah, they take the cash and run and say, okay, yeah. But yeah, it's something that needs to be corrected, and hopefully it shall come to pass. Yeah. Yep. Cash deals, cash rules. Yeah. So you know, but yeah. So that pretty much is our topic of discussion for today as to when will housing become more affordable. Oh, I didn't give you the date. All right. So my apologies there. So when can we expect to see the housing prices become more affordable to each and every one of us? Well, going by the current trends and doing some research and what some prognosticators are saying, they're looking at by the time we hit February of 2027, we should see a 30 to 40% drop in the housing prices. And that could really, put us in a place where so that the average housing price was what 440,000 as of October 2025. So say 40% of that. Uh, Help me out there, y'all. 160,000 less. So we're looking at 280 somewhere about. No, somebody good with math, help me out on that one. So yeah, if it was 140,000 minus 140,000, oh, so 300,000. Okay. So yeah, I would say about $300,000 we're looking at for the average home price by February 2027. That's not bad. That's not bad. You know, a lot more people will be able to afford a home if the prices go down to that range, and I think they will. As we were saying earlier, with the foreclosures coming into the market, that's going to automatically drop the prices, and it's just going to cause the comps to go down in those neighborhoods, and ultimately it's going to demand that people lower their asking prices when it comes to selling their homes if they actually want to get the sale. All right. So as I stated earlier, next week we're going to talk about the rental aspect and how and when the rental properties will start to become more affordable as well. And they are greatly impacted by the actual home prices. So it's going to be a lot of the same information in which we shared today, but with a few more golden nuggets. So tune in next week for that part of the discussion, as we will talk about the rental properties when they shall become more affordable as well. So we're going to close things out for today. I hope you got some good information and tips from this discussion for today. And if you have not already done so, please be sure to subscribe to our YouTube channel, which is What's Holding You Back Now, as you can see it scrolling across the bottom of the screen. And also, please share out this broadcast on your social media platforms. Share it out so you can go back and review it at a later time, and also share it so that your friends, families, and your loved ones can see this information as well. All right. So, once again, thank you so much for being a part of the broadcast this afternoon. Hope you got some good nuggets from it. And we look forward to seeing you next week at Wednesday. Sorry. Next week, Wednesday at 6 p.m. Eastern Time for another edition of What's Holding You Back. Take care.
Stumbling blocks and naysayers fade. When you burn with passion, won't be swayed. Every mountain, every mile, cover them all with a smile. What's holding you back? Holding you back from touching the sky. What's holding you back? You gotta fly like an eagle and go high.